because they're the ones accumulating it. And at some point, we see the price setting move from the COMEX, move from the LBMA to places like Shanghai, where, by the way, Pierre Lassonde said the price ultimately will be priced in the East, not in the West, when the volume on Shanghai surpasses COMEX. Well, just recently, the Shanghai Metals Exchange and the Shanghai Futures Exchange combined volume is greater than that of the COMEX, making it number 2 most heavily traded platform for gold in the world. So how close are we? A lot closer than we've ever been, in my opinion.
In today's episode, Andy Schectman, a well-known expert in precious metals, has recently highlighted the possibility of a major revaluation of gold that could push its price to an astonishing $143,000 per ounce. According to Schectman, this dramatic target is based on calculations that align gold's value with the amount of debt and currency in the global financial system. He explains that as countries, especially in the East, move away from the US dollar and prepare for a potential gold-backed currency system, the price of gold will need to reflect its true monetary value. Schectman believes this scenario is no longer far-fetched, but increasingly likely given current trends. Schectman points to the unprecedented gold buying spree by central banks as a key indicator of this coming shift. Countries like China and Russia have been aggressively adding to their gold reserves, signaling a lack of trust in the current dollar-based system. He argues that the sheer amount of fiat money created by central banks over the years has devalued currencies, leaving gold as the ultimate hedge. For Schectman, the $143,000 target isn't just speculation. It's a reflection of how undervalued gold is in today's financial system. This revaluation, he suggests, could occur in response to a global monetary reset or a major geopolitical event. What makes this scenario even more plausible, according to Schectman, is the growing divide between the physical gold market and the paper gold market. He points out that physical gold is becoming harder to source, with premiums rising and inventories shrinking. As this disconnect widens, the true value of gold could finally emerge, especially if central banks decide to peg their currencies to gold at a much higher price. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
Gold is held in every central bank balance sheet, ironically enough, in an account called the gold revaluation account. You have the head of the Dutch National Bank who's been advocating for revaluing the price of gold for a very long time. This isn't a new topic, by the way. I mean, Roosevelt confiscated gold in April of 1933, paid everyone $20.56 for their $20 gold piece. That 56 cents 100 plus years ago had significant purchasing power back then when a loaf of bread was a nickel, and you're getting an extra 56 cents for every $20 coin that you turn in. It had significance. People were happy, and then immediately he devalued the dollar by 40%, making gold $35 an ounce. And so it was revalued in essence. And we saw the same thing in 1971 when Nixon closed the gold window, only it was revalued by the market, not by a central authority. The window was closed at $35 an ounce, and here it is today at over $2,700 an ounce. It was revalued. To bring it closer to home, Senator Loomis from Wyoming, Cynthia Loomis, at the Bitcoin conference in Tennessee, speaking right after Trump, gets up on stage and says, President Trump is advocating for the Bitcoin Reserve. I am going to float a bill that requests the gold being held by the Federal Reserve on behalf of the Treasury is revalued, with the proceeds being used to buy the Bitcoin. And so the point of it is that it is an option where all of the central banks have been accumulating gold for the past several years. And before that, the most powerful bank in the world reclassified it the only other tier 1 reserve asset in the world. And if you take a look at the progression, the BIS is not only the biggest bank in the world. They're the most powerful. They make the rules. They know the decisions. Why would they reclassify gold tier one? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet. Their purchases were double the 12-month moving average. And then equally as startling to me and telling is the repatriation. Over 40 countries have brought their gold back from the New York Fed and the Bank of England. India, as an example, bought more gold in the first few months of 2024 than they did all of 2023, and they brought all of that home along with 100 metric tons they've held at the Bank of England for a very long time. There is a drive to repatriate the price of gold. There is a drive, or repatriate gold in terms of possession, and there is a drive to revalue the price of gold to reflect a balance sheet across the globe that are filled with liabilities. And as it is right now, gold is not allowed to offset those liabilities on the balance sheet and is valued across the globe at $35 an ounce on those balance sheets. It's no wonder the head of the Dutch National Bank or one of the main representatives at the Bundesbank say, yes, we have all this gold in the revaluation account. We should do something with it. So yeah, I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at 142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And you know, every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. And when I saw it come closer to home with Senator Loomis actually bring it up, I started to think, well, this is something that's on the table. They certainly notice it.
In today's news recap, gold poised to overtake record peak as dollar drops on Trump remarks. Gold prices climbed over 1% on Friday, closing in on its all-time high hit in October as a weakening dollar on U.S. President Donald Trump's push for lower rates and tariff uncertainty drove the metal towards its fourth straight weekly rise. Spot gold prices, which have added 2.7% so far this week, are a mere $17.3 away from the record high of $2,790.15 hit on October 31. One factor certainly seems to be the drop in the U.S. dollar. Some of the biggest factors that are driving it are associated with President Trump talking tariffs, said Bart Mellick, head of commodity strategies at TD Securities. Trump is at risk of elevating prices, and I think the gold market perceives perhaps a higher inflation and possibly a central bank that's more accommodative. In this climate of uncertainty, zero-yield gold continued to shine as a reliable hedge against inflation and instability, while it remains particularly appealing in a low-interest rate environment. At the World Economic Forum on Thursday, Trump called for an immediate reduction in interest rates. The dollar hit an over one-month low, making bullion less expensive for foreign buyers. Trump has said tariffs on Mexico, Canada, China, and the European Union could be announced on February. 1. A short covering rally has boosted spot prices, but ETF flows remain choppy ahead of the Fed meeting, the bank noted. Traders expect the Fed to leave rates unchanged at next week's meeting. Spot silver was up 0.8% at $30.67 per ounce, and platinum rose 0.6% to $948. Palladium gained 0.1% to $190, $992.75, hitting its highest since November 25th. All were poised for weekly gains. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It would create hyperinflation. It would eradicate debt across the whole spectrum, and then would hopefully allow a new system to rise from it. What we're talking about is a reset. It's a reset, and it's a way to I think, reliquify all of the central banks and start on a foundation of solid money. The central banks are the ones that would benefit more than any. You talk about the people who will even own an ounce of gold, it's the pimple on the elephant's rear end. Because as Rick Rule will say, if you ask him, he's here, he'll say 0.5% of the American public owns any gold whatsoever. You're talking a minuscule amount. So the big amount of gold is held by the central banks. It would benefit all of the central banks. European is 35. The United States is 42.22. Okay. And I'm not exactly sure when they valued it and officially made it at 42.22, but all of the European countries, Bundesbank included, is $35 an ounce on their balance sheet. And they call it the revaluation account. So in essence, if you think of a balance sheet, everything's balanced. They have their gold in their asset category, and they have the exact same amount in the revaluation account on the liability side. So they offset, because the way the rules are right now, you cannot offset a liability with your gold. What they're all saying is, let's put gold at a much higher level and write it off against all of our liabilities. And in essence, just like that, your balance sheet. Now, people say, well, does that mean they have to sell the gold? No, it just means that their liabilities and their assets have balanced out, which would give them the ability to do other things that they otherwise couldn't do. To me, it's if you take a step back again and realize, why did the BIS reclassify it tier 1? Why are the central banks buying it off the charts? And why are they repatriating it? I'm not saying it's going to happen, but I'm saying it's something they notice. It's one of these deals that it might just be too hard to pass up in terms of the benefits outweighing the drawbacks. I mean, I do. In the United States, it's not as big of a difference as you would think, because the majority of all the debt is owed to the American people. Medicare, Medicaid, Social Security, and government military pensions are $175 trillion unfunded, all owed to the American people. And over the last several years, as the Americans have been chasing yield, leaving the banks, going to money markets, record $7.5 trillion in money markets, that's all invested in treasuries. The insurance companies, the pension funds, they're all invested in treasuries. As we have been chasing yield, the American public has been buying the treasuries. At the same time, most of the world has been shedding and rolling off their treasuries and replacing it with commodities. We only owe $7 trillion to the rest of the world. If we were to Jasara, in essence, just forgive the debt, most of it would be on the American people. It'd be a lot easier to start over and reset it that way. But I don't think that's something that they want to do. This would kind of be it would, in essence, kind of be the same thing to a degree, but it would be one that would, I think, not immediately put the United States in a position of loss of credibility completely and totally. No one's going to trust them again if they just outright default.
No. What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.